Good morning, everyone, and welcome to the morning market review. It's Monday and it's the 10th of July. My name is Russell Shaw. I'm a senior market specialist at FXCM, and my email address, if you'd like to correspond, rshaw@fxcm.com. I'm going to go ahead and bring up our disclaimers. First is the high risk investment warning. I'll keep this on screen for a few moments. Good morning, Raj. Very nice to have you on the webinar as always. Thank you for everyone that has signed in this morning. It's much appreciated. I'll just keep this on screen for another few seconds. All right, let's bring up the market commentaries disclaimer. And the references MarketScope 2.0 and TradingView. I think it's worth just going on to TradingView for a few seconds. I'm showing you guys the US 2-year yield. I like looking at it. It's very close to the short end. It's the short end of the yield curve. It reacts very quickly to changes in the cost of capital, so it is a proxy for monetary policy. Last week we had very strong ADP, but then we had a miss on the non-farm payroll. Just take a look at the candlestick for the US 2-year yield. You've got a spark up, spark down. Really a long-legged doji, or to be more precise, long-legged spinning top, but the implications are the same. It's a candle of uncertainty. What's going on with monetary policy? And that's the question. And the monetary policy, I think, is something that we look at because it will have a bearing on the US dollar. So here we're bringing up the US dollar, and the US dollar has changed somewhat from last week. It's very interesting the way that it evolved. And what I want to do is, first of all, I want you to take note of where it is relative to the 30-week moving average. Now, the moving average is not a great indicator to be using here. The moving average is a trend following indicator. We're not trending, we're actually consolidating. But just where is the candlestick relative to the moving average does give perhaps some insight, and it's below. It slipped below that 30-week moving average. You can see that it just is chopping around that 30-week moving average in consolidation, but we have dropped somewhat, and we're just going to do a quick analysis around the US dollar and last week's price action. I think it's very interesting. Hey, Howard. 42. Yeah, the weather is pretty cold over here. All right. Let's take a look at this candle, which is the candle from 2 weeks ago. That is the highest high in at least 3 candles, so we call that the reference candle. Then if you take a look at last week's candle, it goes below the reference candle's low, and it actually, let's make this a different color. It goes below last week's I beg your pardon, goes below the reference candle's low and closes below it. Well, that's a reference candle reversal right there. And the reason why we want to try and identify these reference candles is because if we are going to have a swing, it has to start off with a reference candle. So I don't know if there's going to be a swing, but I do know that the platform for a swing has now been laid. So what we could do is we could take a look at this in terms of the consolidation pattern that is the US dollar, and that consolidation pattern is a symmetrical triangle. Just want to make it a bit thicker. Okay, and here is the lower boundary. Now, the change up between this week and last week is the bearish reference candle. In other words, it's looking as if we may be setting up for a break to the downside. That would be interesting, because last week we were talking about perhaps a break to the upside. So in the span of a week, the narrative changed somewhat, And the reason I think the narrative's changed somewhat is because of the uncertainty in terms of monetary policy. So we've gone back to the US 2-year yield. Okay, so there's uncertainty here in the US 2-year, perhaps now being reflected in the dollar potentially going to challenge its lower boundary. What we can do is keep an eye on the RSI, and you can see that it's dipped below 50. If it holds below 50, there may be a downwards pressure here. And if we get downwards pressure, well, then that lower boundary is going to be tested. Now, let's go through to the daily chart and see if there's any directional bias on the daily chart. And we'll do that using the zones, okay, the zone analysis. So what's happened here is that we have dropped effectively from zone 1, which is the upper blue, upper red. We've dropped down into the neutral area. So we don't quite have the bearish area being reached yet, but we do have a relative weakness. What's that relative weakness? Well, the relative weakness is a drop from the zone 1 into zone 2. That's a relative weakness. And then what we could do is we could take a look again at the RSI, and it's dipped below 50. Now we're lacking trend in the dollar, and that is problematic. As we've mentioned before, it's problematic because without volatility, it makes trading that much harder. It's easier to trade trends than it is to trade consolidation patterns. And more than that, the dollar tends to ripple through to other financial instruments. So if the dollar is consolidating, that consolidation ripples through to other instruments rather than a trend. So the fact of the matter is, we do have a neutral pattern on the weekly, okay, some sort of equilibrium. We do have a neutral reading on the daily, but having said that, I would suggest a downside bias given the bearish reference candle on the weekly and given the drop from zone 1 into zone 2. If that holds, because remember we're neutral now, but if the relative weakness holds, then the rally over here may be exploitable. Let's go down to the hourly and see if that's the case. So go down to the hourly, and if the weakness is going to run through, well, then we want to watch the central pivot very carefully. If the central pivot is a key reaction level, we want to see the EMAs cross to the downside. Let me just make this easier on the R. Okay, there we go. So the EMAs, if we get a cross down on the EMAs, that would be trigger 1, and then if we get a cross down on the stochastic, that would be trigger 2. So some sort of weakness potentially manifesting, and if it moves down towards the lower quintile, okay, then the dollar's starting to move, right? Then the dollar, then the dollar is starting to move. Now, if the dollar is starting to move, then we can take a look at other Forex pairs and see if they're starting to move in as well, but in an opposite direction. So given the fact that there is, let's just reiterate what we have here. We've got a neutral pattern, but within that neutral pattern on the weekly, a bearish reference candle reversal. We've got a relative weakness from moving from zone 1 to zone 2. We're still neutral. That's the issue. We're neutral. But if the relative weakness is set to continue, then it wouldn't surprise me if the central pivot acts as resistance. If that central pivot acts as resistance, okay, then let's go through to euro and see if there is some sort of signal that's generating on euro US dollar. Just going to bring that up now. So if the US dollar is showing some signs of weakness, then potentially euro showing some signs of support. Okay, so we don't have a reference candle reversal here just yet, but we do have the reference candle. I would say that's probably the reference candle. but we do have a reference candle reversal back here. Okay, and what we can do is we can put in the HT there, so higher trough. Let's just make this a little bigger. I'll make it 12. Okay, so perhaps the higher trough here leading into some sort of movement. You can see that the RSI is on the bullish side, isn't it? So let's go down to the daily chart, see what's happening. And we do have Euro pushing into zone 1. So there is some relative strength coming through on the Euro. And although we don't have the reference candle reversal on the weekly, which would be more powerful than it is on the daily, we do have it on the daily. So here is the lowest low, and here is the completion of that reference candle. And if this bullishness is going to hold, well, then we've got some red here. In other words, a potential dip in some upwards momentum. Well, if we've got a dip in some upside, let's see if there is going to be an hourly signal on that. So we go down to the hourly chart. And what we can look for here is the central pivot. Looks like the obvious level of support. And what we want to see is if we get a positive cross on the EMAs. We want to see if we get a positive cross on the stochastics. That would be the two triggers. And if we get the two triggers, well, then a movement here to the upper quintile would suggest that there's going to be an underlying bullish momentum. So what we have so far is potential, because we don't have a trend, potential weakness in the dollar. Okay, that seems to be filtering through to the euro, and the euro seems to have some underlying support. We want to be keeping an eye on the central pivot just to see if that central pivot is going to act as support, and if we do get the two triggers and then the movement to the upper quintile. All right, let's just take a look at cable, see if there's some support coming through on the cable pairing. All right, so this is interesting. Let's take this arrow out because we do have the bullish reference candle on the weekly here. So what I want to do is I want to put it in the peaks and troughs here. Let's put in the peaks and troughs so that we can see the trend. And this is very interesting because here we do have a trend. We've got a reference trough over here. We've got a reference peak right over here. Once we've got the references, take a look here. Higher trough 1, okay, higher peak 1, and then we do have the next higher trough. We don't have the next higher peak yet, I don't think. I don't think we've got it, but we do have the next higher trough here. Okay, so on the weekly, pound is charting an uptrend. We can see that the RSI is on the bullish side of 50. We go down to the daily chart. Well, take a look here. It's pushed into zone 1. Okay, the RSI is sitting magnificently between 50 and 80, right? And because there is some upwards momentum, this red here becomes very interesting. In other words, do we have a dip in the uptrend? Well, let's go down to the hourly chart and take a look. And again, the central pivot is the obvious level to keep an eye on. And we want to see if we get a bullish crossover 1, a bullish crossover 2, that's the two triggers. And then, of course, we want to keep an eye on whether the stochastic makes its way through to the upper quintile and holds, because that would be that upwards momentum that is needed to generate swing. All right, let's take a look at gold and DAX just to end off. So let's go through to gold. Gold generally has a negative relationship to the dollar. So if the dollar is showing signs of a weakness, we want to see if there is some signs of strength on gold. We don't see that yet. There is a potential reference candle signal 1, but we don't really have more than that. So gold, disappointing, not reacting quite as well as the euro and cable. If we go through to the daily chart, well, you can see that it is in zone 2, sitting in the neutral area. Yes, it has moved from zone 3 into zone 2, so there has been some sort of relative strength, but there's not really a reference candle reversal here. Okay, so there does seem to be a lag on the precious metal side. Let's just take a look at one more. Let's go through to DAX and do an analysis on the DAX instrument. All right. I'm going to move the trough here because we don't have anything here that's going to give us trend. So I'm going to move this here. So we've got the reference peak here, the reference trough over here. So we're measuring the trend of DAX. What I don't like about this is that it's taken out this level here. So it does seem to have ended the uptrend in the DAX for the time being. So we've got, see, an uptrend is higher troughs followed by higher peaks. Well, if it's taken out this trough here, this is actually a lower trough. Okay, and in fact, there's a clue here with the RSI that's moved below 50. I'm just making that thicker. So the fact that it's moved below 50 does indicate weakness starting to come through on DAX. Let's go through to daily. No surprise here, it's shifted into zone 3. And what we actually got here is, here we've got a downtrend in the daily. Peak trough followed by a lower peak, followed by a lower trough. So there's a bearish element to the DAX. So that's sort of come in after about 10 weeks of consolidation sideways. We're actually seeing some weakness seeping into the DAX. It's pushed into zone 1. You can see that the Bollinger Band starting to pull away from one another. So there's a danger that there is going to be extra volatility here that pushes the DAX down. What we've got to watch for here, let's just clean this up. You can already see that we've got a bearish cross here. So if we get angle and separation to the downside, we've got a bearish cross on the stochastic. It's looking quite, it's looking quite rickety, so to speak. Okay, it doesn't look like there's a lot of balance here. So if we get the stochastic that falls into the lower quintile, well, look what happened the last time it fell into the lower quintile. Okay, I mean, yeah, and we got this terrific movement down, a terrific swing down. So the DAX looking quite rickety at the moment. So keep an eye on the central pivot. If that central pivot resistance holds, then we could see some angle and separation developing in the EMAs to the downside. And if the stochastic falls into that lower quintile and holds, then there's a potential weakness in store for the DAX. Okay, that's as far as we'll go for this morning, guys. If there's any questions, please go ahead and type those in. Any questions? Go ahead, type those in. All right, let's wrap up here, guys. Thank you very much for joining and have a good day, good evening ahead. We shall chat tomorrow morning. Thanks very much, guys.